According to a recent report by the International Energy Agency, it's expected to cost around $4 trillion a year. The Wall Street Journal says despite that huge number, financing it won't be as hard as many believe. Joining me now is Greg Ip. He's the chief economics commentator at the Wall Street Journal. Greg, to build off what Diana just said, I love this quote from Brian Moynihan. He says, if there's a revenue stream, then the funding is infinite.
Yeah, I love that line, Kelly, because, you and I have covered Wall Street for many years, and we know that where there's a profit, the Wall Street will jump in there, and the money just comes like water, right? Let's break down that $4 trillion number that you just cited from the International Energy Agency. That's the figure they expect we'll need to be investing in sustainability by the end of this decade to achieve the net zero target. Sound like a lot of money? Well, if you actually look at it relative to GDP and you subtract what we're already spending on GDP, for the United States, it only comes to around 1% of GDP. We have increased investment by that much many times in the past. That's roughly the scale of the internet boom. That's roughly the scale of the housing boom in the 2000s. So the key here isn't finding the money. There's no shortage of capital. There's a shortage of projects to invest that capital in. And even that's starting to change.
Yes.
So as you had Alan Juppé on just a few minutes ago. He's talked about setting an internal price at Unilever of about $50 a ton. That creates a pool of capital that then generates revenue streams out there in the venture capital environment to say, hey, that's a demand that we should try and invest in to meet.
Probably it's the biggest change over the past couple of years. And I guess the most important question I could ask you would be how much of this funding is coming from the government versus the private sector? If the incentives are now in place, can it all come from the private sector so it doesn't have to come in terms of higher spending, higher deficits, higher debt?
Absolutely. In fact, all of it can come from the private sector. Now, in the case of the United States, that's easy because, for example, most of our utilities are investor-owned. When you go abroad, a lot of those investors are state-owned. And so, of course, some of that will have to come from the state budgets. But keep in mind, we're talking about investment in the true sense of the word. It's not a cost the way, for example, fighting a war is a cost. It's an investment in that when you put the money in, you get a return. When you invest in, for example, an electric car or renewable power plant or a power transmission line, you get a stream of revenue over the next 30 or 40 years. And what's often forgotten is that renewable energy has very low ongoing operating costs because there's no fossil fuel stock to go into it. The key is overcoming the initial very high fixed costs necessary to get the investment in the ground and get the manufacturing scale economies down.
And the price plunges over the past decade make that all the easier. Lower cost of capital, like you said, it can be debt finance. It's a little bit more reliable. A lot of positives heading in that. You go ahead, Greg, because you're the one who's got to go.
Sure, yeah. I want to make one final point because all today we've been talking about Tesla, haven't we? A $1.2 trillion company that no longer relies on federal subsidies. People want to buy those cars, not because it makes them feel good in an environmental sense, but because they're incredibly high-performing cars. And just in the 5 or 6 years it's taken for Tesla to achieve what it's done, it has proven you can make money on an electric car, and it has forced everybody else all the other car manufacturers to follow suit. It's not enough. We have so many hard to decarbonize sectors like steel and cement and aviation where we're still on the very high cost part of the technology curve. But the fact that we're talking about Tesla the way we are today, I think, is evidence enough that if you can put the technology there and if you can get the incentives there, the capital will come enthusiastically to finance that transition.